Welcome and welcome back, everyone. So once again, ladies and gentlemen, my name is Tasha M. Dyer. I am the creator of the BYOB Cash Out, and I want to welcome each and every last one of you all to BYOB Market Talks. Now, I'm going to go ahead and get my screen share going with you guys this evening. Let's see here. All right, got screen share going on here. Now, one of the things that I promised that we were going to talk about today is Confluence, right? We promised that we were going to talk about Confluence. Now, you guys have had an awesome day, right? You guys had an awesome day, right? You guys have been cashing out. You guys have been cashing out. You have been doing extremely well. And I love it. Drop that 777. And look, I got a yes, 777, right? So you guys have been cashing out. You've been in profit, okay? So what I want to do, I know we got some 111s on the call. That means you are new. I got some individuals who are still learning how to cash out. So that's why we got some 222s on the call. So you definitely want to definitely want to make sure that we all are doing, you know, kind of we all are understanding the strategy. And we want to also make sure that you guys understand the tools. How do we use it? I know we just had that AJ drop, and some of you all literally just dropped that 777 for that take profit one, right? So I'm gonna kind of show you right quick that kind of hit that tap that take profit. We're gonna go over all that tonight. So we're definitely gonna talk about that. That was a call from this morning. I saw it on the 5, and then we talked about it again on the 9, and look how long it took for this trade to manifest. So we're gonna talk about that. I want to go over the strategy, make sure you guys understand the BYOB cash out. So let's do that. Let's talk about those quick trades. Let's talk about let me see. Talk about those quick trades, and then we're gonna definitely talk about, you know, which are those 10 pips and cash out. Talk about those things, and then we'll definitely get you guys moving on understanding how to their strategy. So because I know everybody's like, I want to drop my 777 in the chat. So, and we're going to show you how to use those tools. But a big part of it and understanding is that Confluence, right? It's that Confluence. And you guys had a lot of questions on that. So I want to make sure you definitely understand that. All right. So first thing first, BYOB cash out. Let me get a 555 in the chat if you're still trying to understand how to cash out. Because in order to understand Confluence, you still got to really understand the strategy. So you're still learning how to cash out. All right, so, okay. You got to drop the 777. It's like in the middle of it all, I cashed out. All right, so, okay, so let's talk about what the BYOB cash out is. So understand that, yes, that we're going to start you on the 15-minute chart, okay? We're going to start you on the 15-minute chart. So we'll kind of go over that too tonight, so that'll help you as well. So we're going to start you on the 15-minute chart. Now, you don't have to stay, and the question was, how do you know what pairs to look at? So you don't have to stay on the 15-minute chart, but you want to start on the 15-minute chart. Why do I want to start on the 15-minute chart? One, because you are learning the strategy. It helps build your confidence. It helps build your understanding. It helps build your account balance when you are learning and you can get in and out of the market, okay? So let's say you haven't learned your support and resistance lines yet. You haven't learned any of that. One of the key things to remember is there is no secret to how many, there's no secret to how many pips you can grab, right? There's absolutely no secret to how many pips you'll be able to get or how many pips you can grab outside of the 10 pips and cash out. I mean, it's literally no secret to that. It's no magic number. So what you're looking for initially So what you're looking for initially, or what you're looking for first, is you want your 10 pips and cash out, and then you begin understanding your support and resistance lines. You begin understanding a little market structure, right? You begin understanding that, and from there, that's where you'll begin. That's where you'll begin to understand how you can go for more than 10 pips. So we want to start everybody here, understand that. That's why we start here at the 15-minute chart. So you don't have to stay here. This is not just a scalping strategy, okay? This is not just a scalping strategy, okay? I want to make sure you understand that. So when you do that, okay, I definitely start here on the, and if you have a question, drop it in the chat. Go ahead and just drop it in the chat and I'll answer the question as we go along. Just drop it in the chat. I see I got a hand raised. So just go ahead and drop your question in the chat and I'll answer the question as we go through here, I promise. So, so let's go through here. So understand, okay, now as we're going through here, what I'm looking for first is made up of 3 indicators, okay? It's made up of 3 indicators. And what those indicators are, okay, exactly. So one will be able to get 10 pips without understanding support and resistance. That is absolutely correct. You'll be able to get 10 pips and cash out without understanding support and resistance. That is absolutely correct. So now, so what I'm looking for first and where I want to begin is, so what I'm looking for first, I got my stochastic, okay? So, and this kind of went to like a little consolidation. So that's why I'm kind of pushing back, because I don't want to introduce you to something, especially in a consolidated mode. So what we're looking for first is, I got 3 indicators. I have my stochastic, I have my Hikinashi candles, and I have my PSAR, okay? That's where we begin. I got my stochastic, I got my Hikinashi candles, and I have my PSAR. So the stochastic, okay? The stochastic is, you know, this is my leading indicator. So I'm always going to start here first, okay? I'm always going to start here. I'm going to begin here with my stochastic. Then I'll come to my other 2 indicators, which are lagging. So that is why we're down here first, okay? This is, I want to be clear. And you'll see that tonight. I got a trade that I want you guys to look at, and you'll understand that a lot clearer in just a little bit, okay? And so then these 2 are lagging. Now, one of the questions I get a lot, or do I have to wait? Because you guys have gone through the academy, you've understood price action, you've sat under the educators, and you do normally with Japanese candles. So let me go ahead and switch this for you. This is what Japanese candles look like. And so with Japanese candles, like you're looking for those engulfing candles, or you're looking for different candles or different things that actually tell you when do you enter. So you do normally have to wait for a candle to close, or you have to wait for the 2nd or 3rd candle to enter, or different things that you wait for before you enter a trade. The difference of Hikinashi candles is, the difference with these candles are these are trend candles. These candles are literally candles that are, these are like candles that interpret the market for you. They translate for you. So these are trend candles. So they're using calculations. They're an indicator. So because they're an indicator, you notice that when if like this candle right here, this one has a wick on the bottom. So if I was to come here, and I want to, you know, just to kind of help you guys understand a little bit clear, if I was to come here, and I was just to kind of circle, or if we can put an arrow here, just to kind of like point out this candle that has that wick on the bottom. I changed back to my traditional candles. You notice that this candle, right, this will be that candle that you'd be measuring that move off of. This will be that candle that you would be waiting for before you took your entry. So you notice that I'm not entering the market on this candle. This candle has an underlying wick, right, in my Hikinashi candles. So I'm not entering the market on this candle, right? So I'm entering on the next candle. So it's already being done for you. So that work is being done for you. So what we're looking for is that green candle with a flat bottom. So you don't have to sit there and try to figure out the candles, or, you know, it interprets it, it translates it for you. So you're simply looking for, I don't have to say, okay, was that engulfing? You know, is that candle bigger? I don't have to do any of that. Is it a green candle with a flat bottom? Is it a red candle with a flat top? It's just that simple, right? It's just that simple. So like this one right here, this one has a wick on the bottom. I'm not entering on that candle. This candle has a green candle with a flat bottom. So I don't have to wait. Exactly. When you're looking at the Hikinashi candle, when it has that flat bottom or flat top, that's your candle. Exactly. That is your candle. So it simplifies it for you. It simplifies it. Okay? It simplifies it. So now what I'm looking for is I'm looking for my PSAR. This PSAR is that parabolic stop and reverse. This is that reversal in the market. This is a trailing stop loss, okay? So a lot of the times when we're on the calls in the morning, that's why we call this market talks, I'll be like, stop loss above and below the PSAR, okay? And I'll say it really quickly, okay? Because we're here to make you that master trader. We're here to make you that signal. So, and going back, just kind of look at some of these things, okay? I just want to point out these PSARs. Now, right here, when that market reverses, you see that these candles will touch a PSAR, okay? It is a trailing stop loss. Exactly, you do not have to wait till the candle is full buy. It forms as is. It forms as is. And I'll go show you one. We got about a minute, less than a minute. So I'll go show you. So look how, you see how this is a trailing stop loss? Look right here. You see how this one actually will touch this, but it doesn't touch outside of it. So your stop loss is always not on the PSAR, but it's outside of the PSAR. That's why I don't tell you where your stop loss is, but I will let you know that your stop loss is always outside of the PSAR. So your stop loss is always outside of the PSAR. So just kind of help you guys understand that point a little clearer. So this might be a little, we got a candle that's about to form. You see, it might be small because we got some momentum shift happening right here. We're on a support and a resistance line. So that's what I was saying. It might be a little small, but they form as is. I knew we weren't going to get much right here because of where we are. I wanted to kind of show you. So let me go jump to another one. So this one just formed, okay? This candle just formed. You can put a support and resistance line. So this candle just formed. It's kind of weak, but they form as is. So this one's got a momentum shift happening right here. And this one, that one, it forms as is. So you can see the support and resistance line right there. And it's been tap dancing around there. It's been tap dancing around it. So that's where it's at. It's been tap dancing around it. So that's where it is. So, all right, so let's talk about this actual, how do you trade the strategy now that you understand the indicators? So yeah, so that's what, you know, and so what it did is it hit it and it's bouncing back up. It's bouncing back up. So that's why I knew that candle was going to form a little weak. So, okay, so now let's talk about the actual strategy. So first thing first is I always want to look at the stochastic, okay? I always want to look at the stochastic, and this is how you'll begin to form your 777s in the chat. So it's always around that 20 and that 80. So you notice that this actually runs from 0 to 100. And so I mentioned that it runs from 0 to 100. That's important because if I'm focused on 20 to 80, but it goes from 0 to 100, what do you think that means? That means that it can still go from 80 to 100. It can still go from 20 to 0. So when we're looking at this, that crossover and cross up is important. This crossover and cross down is important. So when I'm looking at my stochastic as that indicator, right, like right here, I have a crossover and cross up. It is beginning. This is the formation of a crossover and cross up. This is very, very important, okay? That crossover and cross up is important. So when I'm looking at a trade, we're looking at trades that have already happened. You're looking at a trade that you're trying to see if it's going to set up, if it's one I'm going to be able to take. So this crossover and cross up is very, very important, okay? So now that this is already transpired, this is already taken, Okay, and that's not the one I want. I want the down arrow over here. Okay. All right, so when I look at that, so I know I got to cross over and cross up around the 20, around the 80. Keyword, around the 20, around the 80, okay? Around is the key word. So you see, this is close, but it's not quite there. But I don't want you to get caught up on, it's not at the 20, I can't take that trade, okay? I don't want you to get caught up on that because we're gonna analyze it a little bit further. Of course, the higher the better, because I'm not taking a trade in the middle, like right here. Yeah, the blue line crossed over the red, but look, it's dead in the middle, it's at the 50. This is consolidation. We're not trading consolidation. That's important. But down here, around, you can obviously tell this was a continuation, right? We had some correction and it's a continuation, okay? This is a look, impulse, correction, continuation, okay? So you can obviously look at it and tell that it was some sort of correction or it was something else that was happening. So you can look at the stochastic and it's following along that same pattern. So I don't really want you to get caught up. Now I know you got, I just gave you the big picture. I know quite a few of you all are looking at that like, okay, you might not be that advanced in your understanding or your studies yet. And some of you guys are like, oh, okay, I see it. That's why we start here. And I'm simply saying, I just wanted you guys to see the big picture. I'm simply saying around the 20. It's simply around the 20, but that's why it's around, because there's always something, is something more. This is strictly consolidated. We're not trading this consolidation. Is there in this 50? There's a 50-50 chance it'll work out in your favor. We're not here to gamble. We're here to practice proper risk management, okay? That's what we're here for. We're here to make sure you put yourself in a winning position. That's what we want to do. Does everything always work out 100%? No, but you see those 777s in the chat, and that's why it's so consistent, okay? So you got this blue line that crossed over the red and the upward momentum. I got my green candle with a flat bottom, and I have my PSAR to the bottom. So just remember, bottom, 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 over here. This happened on the top. We had a little dip, it came back, top, 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 bottom, bottom, bottom for a buy, top, top, top for a sell, okay? I got my red candle, I got my blue line cross over the red at the top. I have my red candle with a flat top. I got my PSAR at the top. That is the strategy in itself in its simplicity, okay? But I do want to do what's called time frame confluence. This is where it's going to help you take it to the next level, because you're seeing trades play out. Just like you look at this one, if this PSAR is still at the top, the PSAR, we don't have all three indicators yet. My PSAR is not at the bottom right now. So we might be consolidated for a while right here. We don't know what's happening on a higher time frame yet. So you looking at this, you don't know where you are in the market. You don't know if you're in a trend. You don't know if you're counter trend trading. You don't know what's going on. The lower time frames do not tell me that. I have to use my higher time frames to tell me that. I don't know where I am in the market on my lower time frames. That's just it. So from a scalping standpoint, could I probably grab my pips? I can probably, depending on the currency you're looking at. But remember, this is where you were, okay? This is where you're at. So, you know, you want to understand where you are. So yes, did it play out? Absolutely it played out. Did this one play out? Absolutely it played out. But you want to understand where you are, grab your 10 pips and cash out, okay? Stop loss below the PSAR, stop loss above the PSAR. We don't put it on it, we don't put it on it. We put it above it or we put it below it, okay? GBP, understand, is going, yes, it's going to be a little bit more. Most currency pairs are not very much on your stop loss. Some of them are like 8 pips, some of them might be 10 to 12, you know, but for the most part, is the PSAR, let the PSAR guide you, okay? GBP will be more because it has so much liquidity in the market, but you can typically get more. Now, I can tell you the GBPs on average, I mean, I can't tell you the last time we have not been successful on a GBP. I can tell you past profits don't guarantee future success, but I can't tell you, and you can just look in the chat and let that validate that statement. So what we want to do is first we want to drop down. When we drop down, okay, when we drop down, I want to make sure it's still buying, and I want to, like for this sale, I want to make sure it's selling, okay? Why is that important? Because you don't, everything happens on the lower, as things start shifting and changing, it happens on the lower time frame first. You know you can use your lower time frames for a tighter entry, but it's also going to happen if there's a shift, if there's a change in something, it's going to happen there first. You don't want to enter in a correction either. So if this has already started buying, or if this is already, like if this was selling, I wouldn't want to enter that trade. Especially, you want to create the right habits. If I'm trading on an hour, this might be a 5-pip pullback that you might enter on, you know, on a 5-minute. But if you're trading on an hour, now we're talking about 20, 30, 60 pips, right? That's really significant, right? So just kind of keep that in mind. So, and now look at this consolidation. Well, we are right here. So that's actually still buying for that live trade that we were looking at. So now let's go up to the hour, okay? I go up to the hour. When I get up to the hour, now what I'm looking for is this to be, the hour is the swing of the market, okay? The hour is the swing of the market. It's not the trend of the market. The hour is the swing of the market, okay? My hour is the swing of the market. So when I look at the hour, my hour is buying, okay? My hour is buying. So that's what I'm looking for it to do. Well, because it's buying, I can get my 10 pips and cash out. I'm with the swing of the market. This one is selling. I can get my 10 pips and cash out. So how do I know how to stop there? Well, study. When I created the strategy, that's kind of how I balance it out. It's called a factor of 4, 5, or 6. You know, it's called a factor of 4, 5, or 6. That's how you know. So like if I'm on an hour, you multiply by 4, 5, or 6. That's how I know to check my Confluence on the 4-hour. If I'm on a 15-minute, I just multiply by 4, 5, or 6. That's how I know to check it on the hour. That's how you check your swing in the market. Right, you check your Confluence on the hour. That's the swing of the market. Now to know what the market is doing overall, which is my trend of the market, I would want to check the 4-hour. So if you drop the 111 and you're still learning, right? If you drop the 111 and you're still learning, you're just trying to get your 10 pips and cash out, that's what you do. That's the swing in the market. Grab your 10 pips, cash out, okay? Grab your 10 pips and cash out. You're a 222, you're still trying, or you are trying to go for more pips, right? You understand support and resistance lines now, okay? And you're trying to do a little bit more. Now this is where you take that next step. You want to go up to your 4-hour and you want to understand what is the actual trend of the market. And this is where you can kind of treat that 4-hour like the head of the household, right? Where you can, you know, this has the overall say so. And what the actual trend of the market. The hour is the swing, the 4-hour is the trend. The hour has some say so, but the 4-hour has the overall say so, right? You treat that 4-hour like the head of the household. So that 4-hour is, you see what's happening with that 4-hour. My stochastic is up. My look what's happening. I got that green candle. So right here on this sale, I know for a fact that I'm not, look right here on this sale, I'm not doing more than my 10 pips. And if you did do, because sometimes on GBP, don't get me wrong, a GBP correction can be 20 pips. A GBP correction can be 50 pips. I've even seen a GBP correction 100 pips. It just all depends. You don't know. Do not chance it though. Put it in profit. Make sure you're in profit. Move it up. I meant to say buy. Did I say sell? I stand corrected if I did. So I'm trying to say buy. So this is a buy. We're looking at this as a buy. Buy. So overall trend is a buy right here. The overall what's happening in the market at this time is a buy, okay? Overall is a buy. So when I go down, so if I circle this, oh no, the last candle would be that current trade that we were looking at. So that's why it's consolidated. That's why we're not touching it. So if I look at this, for like to cover those two that we're looking at, and these two areas that we are actually looking at right here, these two candles for my 4 hour, we're actually looking at, you can kind of see where they went up. And so this one came back and it retested the line. So we knew that we could go up. If I come back down to my 15-minute, you can kind of see where it bought up. The 4 hour is the trend. The hour is your swing. So if you're doing your 10 pips and cash out, right? 10 pips and cash out. 10 pips and cash out. You checking that hour for the swing of the market. The hour for the swing of the market, okay? If you are doing more than that, you need to understand support and resistance lines. You need to understand a little market structure, and you check that 4 hour for the trend of the market to understand, because you would trade it up to a support and resistance line. Like you can kind of see, if I look left, where did this go? It stopped right here at a support and resistance line. If I drop a support and resistance line right there, that's where it stopped. It traded up right there with the trend of the market, and it went right up. And that was like 63 pips right there. It traded right up with that, okay? All right, so let's look at how that applies to with the tools. So I don't know if I'm gonna be able, I do have some, okay, it did pull back down. So first let's look at, so check for the 10 pips and cash out, check the 5 minute, check the hour. You got the Confluence on there? You got Confluence on there, then you can grab your 10 pips. Now, what I will tell you this, I will give you two tips. That's the exception to the rule. GBP is an exception to the rule because GBP has so much liquidity. So like if I go, I'm glad you said you got it down pat. So if GBP, right, GBP, because it has so much liquidity in the market, if you check that hour, you can actually check the 30-minute on GBP because of how much liquidity it has. Grab your 10 pips and cash out, okay? You can check the 30-minute on GBP. The other one is CHF. CHF has the least amount of liquidity. CHF has low liquidity in the market. So I will never counter trend trade CHF. I will never, and this is me, so I will not counter trend trade CHF because it has the least amount of liquidity. So if I run this over a candle on a GBP pair, like just that in itself is almost 25 pips. You pull up a CHF pair that might be 8, it might be 10. So you want to trade where you know you're going to get your pips. You want to trade where you know you're going to get it, because you have to take into account what I call pip reaction time. How long did it take you to get in the market? That's your pip reaction time, right? How long did it take from the time you saw it to the time you got in there? What about your broker spread? I think that was a conversation, correct. If it's not ready on the hour, then you can check the 30 for GBP. What happens if you, on the, like, what was I saying? So if, like we're talking about the different time frames. So, there's a playlist. So let me stay focused for a second. So you wanna go in. So CHF, leave me alone. CHF, right? CHF has the least amount of liquidity. That will have about 8, right? That might have about 8 pips, 10 pips. So CHF will literally, you won't get your pips. I mean, you will not get it. So, right, and your pip reaction time. So, and then of course you have your broker spread. That's what I was saying. You have your broker spread. So the conversation was in the chat today about the time. So especially if you're trying to trade at the changeover of the official market change, right? Which happens for us, like where I am is 5 p.m. Eastern Standard Time. Then you have that gap, right? You got that gap time, like 5, 6, 7, where different things start happening. And so those spreads are, sporadic during that time frame. And so if you look at it and you got now that last number, remember that last number is your broker fee. That's that pipette. So your spread is actually like 50 or 30 or something of that nature. So if your spread is that high and you're only going for 10 pips, does it really make sense for you to be in the market at that time? Does it really make sense for you to go 50 pips to try to get 10? You know, so that's just not, all of this is proper risk management. So, you know, CHF is just one of those that we're not trading, right? It's just one of those that we will trade longer time frames, or I want everything lined up. I'm making sure I'm trading with the trend. There's absolutely no counter trend trading with that. So that one I'm checking the hour and the 4 hour, or I'm just not gonna touch it. And you'll see it on the calls in the morning. I'm like, so y'all really wanna look at a CHF pair? So you got it, George. And so the other question is longer time frames, it lets you ride the trade for a while. Exactly, because everything is in Confluence. So let's talk about that. So that's what I want to go back and pull up for you guys. So a trade that I called this morning, and then a trade that I called this morning, and now you guys, if you took it, you're about 100 pips in profit already. So and then the harmonic scanner, actually, somebody was like around our 9 o'clock call, somebody was like, oh, the harmonic scanner put it out. So once again, on the harmonic scanner, you do not take a trade from the harmonic scanner and just take the trade, okay? Do not take the trade and just take the trade. We brought it back to the vibrato because I saw it lining up. It just took a while before it manifested, right? You guys just took profit, I think, before this call, maybe around 8 o'clock somewhere. And of course, I'm Eastern Standard Time, but you guys just took profit. And this is like that take profit one. This is around the time I saw it. So if I'm not mistaken, I just dropped this trying to remember. So your leverage is going to be your decision, your choice. And Dr. Bythewood, that is, you know, right after this call, we have a call called A Talk with the Finance Doctor. And that is a perfect question for Dr. Bythewood. So I don't know if he wants to chime in or you want to just direct to the Talk with the Finance Doctor, because that is definitely questions and comments and things that he discussed on that call. And that is why we do it. So and so it'll be right exactly after this call. No, I don't drop trades. I'm gonna tell you guys, I'm so anti-signal almost. So I'm like so anti-signal. Signals are fine, so that's fine. So he'll address it on the call. So there you go, Monique. We are the signals. So signals are fine if that's what you want, but they will not get you wealthy. You know, you cannot, I am very pro you being the signal. I am all about you being the signal. So what we do is we walk you through. So the only thing that we really do from a signal standpoint or from a trade standpoint is the US 30 for the most part. And Mr. Rogers will drop that in the trade ideas because we do have that link, and he'll drop it in there. And we really haven't been dropping it since the corona. When I do it on a 9 a.m. call, I'll do it from the markup I see at the opening bell push, but that happens so fast, it's no time to drop it. So I'll do it from the push based on the fundamentals of that opening bell. I'll give you that call, and then I stop it. So it's like I'm not pushing it past that. That's what I'll give you that. I'll walk you through trades, but I believe you have to be the signal. You want to gain wealth? We're not here to just help you get a few dollars to pay your subscription or to pay for the tools. We're here to help you change your legacy and your lifestyle. That's what BYOB is all about. It's about changing your legacy and your lifestyle. And so this is what we are doing. So even I trade different. Like when we're trading, I'll show you a setup. That's why every call I will walk you through the strategy, and we'll identify a trade and you take it. So you either take it for 10 pips or you take it for the duration. So, so this one is the first one. Oh, thank you. This one is the first, where we first identified it and it pushed up. So by 9 o'clock, we did, now some of these we will mark up. Like this one we did mark up on the 9 o'clock call this morning. And so we did mark this up, and we, you know, because I wanted to show you guys how we do this and how we actually take advantage of utilizing the tools with the strategy. And when we did it, but I want to help you understand the confluence. So when we look at it, okay, let me go to the hour because I really wanted you to catch this from the hour. So let me grab this. So we pulled this, and all of these lines are pretty, I did adjust them some. So I do want you guys to understand that. So when you understand your support and resistance, okay, and understanding support and resistance, when you do go to make your, when you learn the support and resistance lines, I draw them from the hour, and please change to the line chart. Okay, the line chart, it shows you your close price, okay? And I'm gonna take this one off since that's not the one we ended up using. But your line chart actually shows closing price. So what we did is I just pulled the numbers on this morning call to show you how to use it. That's from the harmonic scanner. And like they had this one a little bit further down. Well, when we changed to the line chart and you see all of this is nothing but space and opportunity, this is how you miss take profits, right? This is how you miss it. So what all of them I adjusted, you know, but I pushed this up because I want you to understand this is the close price. So I want you to use the line chart because it helps you identify the close price. And when you use that close price, right, you see where it actually has those touches. Okay, we can see where we maximize those touches. So even with the one you just took profit on, okay, you hit those, we're maximizing those touches, right? We're maximizing those touches when you're drawing support and resistance lines, and you come back, and I changed to my Hikinashi candles, okay? So we want to talk about confluence. So this is where this trade was confluent on the hour. Look at where my stochastic is on the hour time frame. I have my blue line that crossed over the red in a downward momentum. I got my blue line that crossed over the red in a downward momentum around the 80, okay? I got a red candle with a flat top and a PSR flip. But before we even get so focused on that, okay, I go to my 4 hour. Where do I have gearing up? The same thing. So before I even got the red candle, I'm looking at my stochastic, right? Because what's the leading indicator? What's leading? Because if I look at where my arrow is, I didn't have a red candle yet because these candles are 4 hours. But I did have a stochastic gearing up. I did have a blue line. I did have this at the top, and I did have this gearing up. This is confluence. The same thing we just went over on the 15 to the hour, right? Same exact thing. So now we're looking at a trade that we just pulled from the harmonic scanner. So when we pulled it earlier, it's been sitting for a minute, right? But it wasn't ready. So some trades you're going to have to wait on, but we're not automatically taking it because the scanner gave it to me. Because when you go to the scanner, if you look on the scanner, all of those trades that they push out, oh, you're welcome. All of those trades that they push out, they're looking at harmonic patterns in the market. Every harmonic pattern does not manifest into a trade. So the ones that are still there are just simply ones that have manifested. So you have to bring it back and apply it to the strategy. So you do not just take it and just take it, right? You don't just take it and just take it. So just to take it, okay? Now, this is where it's just, I can't tell you what's a good time to wait. This one took all day. This one literally took all day. This was at 9 o'clock this morning, and they just hit take profit at, I mean, look when this one, they just hit take profit at 8 o'clock. So this one, so it's all about patience, but it was also 100 pips. So it also closed, this also was 100 pips right here. So, and that's just take profit one. They're not even done with this trade. So I dropped down, and then I can also go to my 15-minute chart. And when I started on my hour, looking at that, I dropped down to my 15-minute chart. I dropped down to my 15-minute chart, Exactly. Regardless of what the scanner says, you have to come back and apply the strategy to know. And now I got a tighter entry on the 15 and bam. So you actually were able to get in and you manifested and you got that whole drop. So now understand when it hits a support and resistance line, okay? When it hits that support and resistance line, you're gonna get a market correction because my 15 is no longer confluent. My hour is no longer confluent, but my 4 hour is still in the sale. Remember, this is ahead of the household. My 4 hour is still in the sale. So you ever wonder why you hit take profit 1 so fast, but then it takes a minute before you hit take profit 2 and you get that pullback? Well, this is that pullback. And so it's gonna, when it cycles back around, and then it'll keep going. So this is where you have to make the decision. Am I a take profit 1 person? Or do I ride this all the way down to take profit 2? Or do I ride it all the way down to take profit 3? There's no magic secret to your take profits. All they are support and resistance lines. And so the difference is when you go to take profit 1, I have confluence for the 15, I got confluence for the hour and the 4 hour. I got confluence all the way across the board. It takes me a minute to get to take profit 2 because typically, you know, honestly, we could have had a take profit in here. Had we had another we should have had a take profit right here. Had we had a take profit right there, then I would have had confluence, or just I wouldn't have had confluence on the 15. You see how we paused, but I wouldn't have had confluence on the 15, but I still would have had confluence on the hour and the 4 hour. Then I would have had, then of course, now we would have been going for another take profit, and we don't have confluence on the hour and the 15 minute, and all of that has to cycle back around before we get to take profit 3. That's why the take profits seem to take longer as you push through them, because they come out of confluence and they have to get back confluent. And it all depends on your patience. Absolutely. Absolutely. So I'm gonna show you one more, right? And then I'm gonna open it up for questions. So this one I actually pulled off the 15 minute. So I've showed you the hour, you know, that was pulled off the 15 minute off the harmonic scanner. This was pulled off the 15 minute off the vibrato. So now I've showed you the hour on the vibrato, right? And the vibratos are typically pulled in a correction. Now this one was pulled, and this is where I tell you it doesn't matter if this says potential buy or potential sell, okay? This one was pulled as a potential, and this is one thing I'm gonna tell you that I do like about this one. It doesn't matter if it's a potential buy or a potential sell, because what this does is signals entry triggers. It signals entry triggers. So when I look, okay, I've already marked it up for you at the time that it was called, and where it gives me like my call price, right? Called at this price. This is the price it was called at. So I just marked it up so you guys can get a visual. This is that crosshair that signaled an entry trigger on the 15-minute chart. So if you're pulling anything on the 15-minute chart, understand that 9 times out of 10 is called in a correction off of the vibrato. That's completely irrelevant though, because this is what I want you to focus on. Where's my stochastic? What is happening? I mean, if we have time, I'll show you, because I got one marked up that actually went in the direction after the correction. We got some trainings on YouTube that actually show you that as well. But let's look at this one. Where's my stochastic? My stochastic's down here. But let's go to the hour, right? Let's look at where we are. So when this one was called, when this one was triggered, okay? When this one was triggered, look where we are. Blue line cross over the red. I got a nice crossover, cross up on the hour, right? I'm confluent there. What's happening on my hour? I mean, on my 4 hour. I'm confluent there. So it called it for a potential sell. Remember, potential, irrelevant. So it is calling it in a correction, but there was something that triggered there that was gonna sell, but right now it's buying. I got confluence. My stochastic says on the 4 hour that I'm gearing up for a buy, and this one is still alive, trade. This one says, my stochastic says that on the hour that I'm gearing up for a buy, right? So how do I know where to do my take profit? Okay, I'm looking at support and resistance lines. I'm gonna go to my line chart to help make life simple for you guys. Get my, grab my line, right? I'm gonna look at this. Okay, you kind of gear it up. I'm looking for touches. I can actually bring this down some. Looking for touches, looking for touches, looking for touches. Okay, and then of course it went up. You can honestly bring it up some, just a little bit, right? Bring it up. So change this back to my candles. You can kind of see where it is. We had a little consolidation over here. That's why it looked like that when we were doing it. Drop down to my 15, right, for a tighter entry. Okay, drop down to my 15 where it actually triggered. Bam. So blue line cross over the red and the upward momentum. Where did I get my green candle with a flat bottom and my PCR flip? All of them, because I needed to look at this. This is where I got everything lined up together. So from here on up, where it met all the criteria, that's 142 pips in profit. 142 pips in profit. All because we just pulled something off the 15-minute on the vibrato. So you got, I can pull it from here. 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 Right? And this one didn't take all day. So we got a few minutes. So and because tonight was about the Confluence and the tools and the Confluence. So do I have any questions on that? Uh-oh. All right, so what if you decided to go to take profit do, since you're trading a 15-minute chart, would you have to wait? Yeah, you want it to be Confluent. If you're trying to trade off the hour, you need Confluence on that. So you got to have Confluence. If you're trying to trade off the hour, you definitely need them to be Confluent. So right now, this hour is in a correction to the 4 hour. So you want the Confluence. And so let me see, would you say AU? Oh no, that was somebody else. I just answered. So would you say AU? I have to go pull that. Can you use the color of the candles? Well, we only got about 5 minutes. Did we look at that one? I'm not gonna pull a pair to analyze. I only got about 5 minutes. So let me see. Can you use the color of the candles and a piece on the 4 hour to determine the trend? That's what these are trend candles. So the PCR is not what's determining the trend. It's the candles. These are Hikinashi candles. So Hikinashi candles are trend candles. So if these are green, right? These are green candles and that's where they're going, then that's what they are. They're trend candles. But if I'm looking at it from here, then I would definitely be looking at my stochastic. I would, now if it's here, just because it's a green candle here, but you look at the fact that it's curved over right here, right? That means that it's something changing out. It's definitely something switching. So this is changing, right? But of course, you can kind of see where this is definitely not done, because yes, this will be on YouTube. It will be on YouTube. It's going into a correction. You missed a bit about the yellow lines, but the yellow horizontal lines. No, the horizontal lines are my support and resistance lines. These are my support and resistance lines. So, but what we did is this call price. So whenever the vibrata, right, what the vibrata does is the vibrata will identify an entry trigger at a support and resistance line. So it gives you a entry trigger, right? It gives you an entry trigger. If you're trading off the hour, you see how it still dropped down to the 15. You still using that 4 hour. Now, if you're trying to swing trade, okay, if you're trying to take this, like, I don't know, what are you trying to do? If I'm trading off the hour, right? Are you trying to take it up to where you're using a daily? Because now you're talking about the hour, the 4 hour, and the daily. If you're trying to swing trade. So it just depends on the type of trading you're doing, because you notice that even when I was looking at the hour, I still went to the 4 and the 15. I still stayed within them 3 time frames. But if I'm trying to, like, if you're trying, what type, or if you're scalping on the 15 or lower. If you're intraday, you're kind of in here. But if you're swing trading, now you want to begin to include the daily. But this all still the same, right? You're all still the same. Nothing requires a buy or sell stop. Nothing actually requires a buy or sell stop. You do not have to have a buy or sell stop. You can use a buy or sell stop, okay? You definitely can use a buy or sell stop, but you don't have to use a buy or sell stop. So, but those are good to know and good to understand. As a matter of fact, there's a training as well in the playlist, and there's a, which playlist is it in? But it's what is it called? I'm trying to see real quick. I know it's in getting started, but it's back to the basics. It's back to the basics. And that's gonna help you understand. That's gonna help you understand. And no, it doesn't matter which one. And yes, there is. It's under market structure. Drawing trend lines is under market structure. So if you guys are not subscribed to the YouTube channel, it's BYOB Challenge. If you guys are not subscribed to the YouTube channel, it's BYOB Challenge. And so there are different playlists that will actually help you get through there. All right, so I'm trying to make sure I didn't miss any questions. I wanted to try to make sure I answered all of them. Thank you, Mr. Rogers dropped it in there. You guys are, you're welcome. I'm glad it was helpful.
There was one question earlier. I don't know if not sure. I don't recall you answering it. What do you mean by ride the wave?
Oh, that's what I'm looking to try to go through to make sure I got all of them. No, when I say ride the wave, it means ride the wave of the market. It means when we actually get in a trade, you can actually, when I say ride the wave, we don't make the decisions of the market. We ride the wave of the market. So when we're talking about riding the wave, okay, so we don't force any trades. We don't force anything in the market. Okay, we just look at the market, analyze it, and we ride the wave of the market. And so that's why this call is called Market Talks, because you want to make sure that you understand what the market is saying to you. You let the market speak to you. You always want to let the market tell you what it's doing. The same way if you have a conversation with someone, you know how sometimes we listen for us to understand in our own explanation and thoughts, and we listen to respond instead of listening to hear. Well, this is market talks because we want you to hear what the market is saying instead of you, you know, forcing you what you want the market to do. We want you to actually understand what the market is telling you and for you to understand what the market is doing. And so when you understand what the market is doing, you understand how the market moves, you understand, right? You understand that we as individuals, right? We don't move the market. We cannot move the market. So when we understand that, you know, there's no such thing as wish, pray, hope, you know, that we can do this and we'll shift it and it'll go that way. No, we have to be understanding. We cannot. So we ride the wave of the market. We listen to what the market's telling us is going to do. And that's how you win consistent profit. And that's why so many 777s in the chat. Because, and that goes back to why I'm anti-signal. Because if I throw something out there, you never know why you took that trade. You never know why you were in that trade. And if it goes, you know, you say I'm too real, you know, you never know why. So you're sitting there, if it goes great, then you're happy. If it's not, then you're mad at me. I want you, BYOB, Mr. Rogers, Dr. All of us want you to be the signal. And that's how we ride the wave of the market, right? We understand the market. We let the market speak to us. All right. You got too many questions, just keep coming back. And you always learn something new, no matter how many times. I'm so glad. I'm so glad. And I hopefully this call clarified a lot. I really wanted you guys to understand that Confluence, because once again, that Confluence definitely is going to help you be able to navigate through the market and utilizing the tools. You have to have access to all the tools. You got to have access to everything. We're here to put you in profit. So that's definitely what we're here for. So love you guys. Love you, love you. Mr. Rogers, you have any closing comments?
Yes, ladies and gentlemen, once again, you've had the opportunity to glean from an individual who's passionate about ensuring that you are as successful as you desire to be. So if you have gotten some tremendous